Hello, investors. It's Don Vandenbord, Senior Portfolio Manager with Revere Asset Management. Today is Thursday, April 27th, 5:13 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with tonight's Revere Market Insight video. State of the market, neutral, still avoiding commercial real estate and regional banks. Possible change to this market state tomorrow, as today was a complete 180 from what we saw in the market the last 2 days. Both of the uh, out both days, the outperformance by tech was sparked by a big gap up in one of the big seven tech names. Today it was Meta. Yesterday it was Microsoft. It's possible tomorrow it might be Amazon, which is up 8% after hours right now, and this is making uh, as we saw in January, a market of the haves and the have-nots, as these big seven tech stocks, which make up over 50% of the Nasdaq 100 and about 20% of the S&P 500, are just uh, crushing earnings, and you're seeing a lot of the smaller players fall by the wayside. But they cut costs. They're rewarding their shareholders, not necessarily their employees, and certainly rewarding anybody that stuck with them after the most recent consolidation and harsh pullback. So let's check the trend gauge over here. Leaders, neutral. That's a pretty fair assessment of it. These big tech stocks are pushing their way hard into leadership category. We really focus more on smaller, large caps, mid caps, and larger small caps when we seek out new leadership, because we're looking for the N factor, something new. But quite a few of them have the N, which is AI related. AI is the buzzword that you're hearing in all of the earnings conference calls from these big stocks, and it's working. Leadership for now, neutral. We'll regroup and see what the 21 over 21 leaders list looks like in tomorrow night's video. Short term, yesterday we went from up, down to neutral as the deterioration over the past 2 days, but that was completely undone today. The big cap indexes gapping and following through to the upside, putting them back above their 21-day moving average. Mid and small still below. We want to get obviously multiple closes back above the 21 for the big guys, and see where mid and small stand by the end of the week. Medium term, our 50-day moving average, same situation. The large cap index is above their 50-day, mid cap and small cap below. And with the 200-day also, large cap index is above the 200-day, small and mid below the 200-day. Mid caps right around the 200-day, but small caps. And again, this is, I say it every video, this is the overhang from the banking liquidity mini crisis that reared its head uh, after Monday night into Tuesday. The reason for that was FRC's conference call. They detailed how many deposits they lost and didn't take any questions. A major failure by management. They were down 50% the next day, another 30% yesterday. They bounced back. You can't really call it a bounce back, but up 9% today. Um, Really a poor job there. But anyway, that caused some fear in the markets. The markets are also mildly concerned at this point, mildly concerned about the debt limit ceiling. Republicans passed a a bill to raise it last night. They have some spending cuts in there that the White House has said absolutely no way that they'll agree to. If you don't think this is a big deal, go back to July, August 2011, when we sold off 18% on fears of default because we didn't raise the debt ceiling. We're about a month away, month and a half away from that being an issue, but it is being discussed, and you're also seeing it in the duration of various treasury bills that are the yield varying. So we'll see how that plays out. Always a wall of worry to climb. What happened in the markets today? Again, Meta sparking the big rally. The big cap index is going back above their 21-day moving average. We uh, got off our NASDAQ 100 short with the gap up, re-engaged on some of our index longs, added to some things that we owned or started working. We'll detail that when we get to the tail of the tape. Here are the final numbers. RG7, these stocks continue to lag the big cap tech, but then again, everything's lagging big cap tech. RG7, 7 ETF growth composite up 1.02%. The FFTY, which is the IBD 50 ETF, was really drugged down today. It was negative. All the other ones were positive because of two blowups, which we'll talk about when we get to the tail of the tape. S&P 500 gapped up 0.6%, just trended up most of the day, ended up nearly 2%. NASDAQ 100 gapped up 1.2, more than doubled that throughout the day, closing up 2.7%. Dow up 1.6%, mid caps up 1.5, Russell 2000 small caps up 1.2, global diversified 60/40 up 0.9. Bonds were the laggard today. Across the board, bond prices down, bond yields higher. In-house GROTECTION up 0.8%. Let's get into it right now. First, we'll show the changes and serious changes to the S&P 500 after the last 2 days. Basically, we are now where we closed, on Monday, which was riding the ADMA, consolidating tightly. But that tight consolidation, we had been commenting, we're gearing up for a big move, a big directional move, and we got it. 2 days to the downside, completely regained today. We closed on Monday at 41.37. Today we closed at 41.35. So it's like the last 2 days never even happened. You can see in the 60-minute chart, 40.50 is where we found support at the open today, at the close yesterday. And then you can see the gap up and just very nice trending higher on the 60-minute all day. It wasn't quite as smooth, but nearly it was on the 5-minute. There's the gap up and an early trend up, then a nice little base that we put in. We pulled back to 40.86, and then this candle reignited things higher. We paused for a little bit in the afternoon. This candle ignited things higher, got near highs of the day, and just based into the close. All in all, a nice trend up day. Now notice over here, what do we see in 41.37, 41.35? Where did we close? 41.35. Let's zoom it in a little bit. Here's your 15-minute chart. This is a big level, 41.30, 41.40. If you go over here, as that's the top of that revised range after this breakout failed around 41.70. We had these 2 days up, 41.70, high 41.62. Then we broke back into the range, but this 41.40-ish area. So really, we got 30 points here to get back to the recent highs. And then we've got two key levels, 41, we'll go back to the daily, 41.95 and 41.99. That gets us all the way back to the February highs before we started pulling back. Will we revisit them? I think the NASDAQ 100 probably needs, which we'll go here now, probably needs to take a little bit of a break after this sprint higher, considering that it's also at recent peak highs from over the last 4 weeks. Let's go to the 60-minute chart here. You can see here's the high on 417, 418, 414. 4.4, 4.3. That's where we are now. So at a resistance area here now. After hours, we're at 321, so a little bit higher, 0.3% higher on Amazon, which is trading up about 7-8% after hours. So we're running into some recent high resistance here, but we're back in the range that we broke down from on Tuesday and Wednesday and reclaimed it. So that makes it a false breakdown. We got more defensive. You never know when a breakdown is going to be the real thing or a false breakdown. But when the market changes its mind, we have an obligation to change its mind or change our mind also as trend followers. Otherwise, we're arguing with what the market's doing. Like Bill O'Neill said, you got to be willing to bend like a tree in the breeze. We did some bending the last 3 days, bending over and then straightening back up today on the strength of the NASDAQ 100. Let's go to the Dow Jones Industrial Average. 2 week days, not quite reclaimed everything in the last 2 days, but close, coming back into this 34,000 area. Mid caps, not reclaiming, along with small caps. The sell off was more vicious on mid and small over the last 2 days, not reclaiming back where we were on Monday, still below the 21 EMA, basically closed right at the 200-day moving average in this 450 level. IWM, small caps, not even close to reclaiming it either. In fact, they were down on Monday, below the 8 and still below the 21, but an undercut and reclaim. This is an outside bullish reversal, bullish engulfing, lower low and higher high versus yesterday for now. That implies that it put in a bottom. Let's go to the 5-minute chart here. You can see here where we started, we gapped up and then started selling off, and this wasn't good early, but just this one candle, bunch of stops below the lows of yesterday, and that's it. We reignited to the upside at 11:25 and then trended up most of the rest of the day before flagging into the close. So good recovery across the board in mid and small, absolute leadership out of the large cap indexes. Let's flip to the dollar now. UUP started off strong with a gap up, lower lows, lower highs all day, closed basically unchanged, barely positive. And this 21-day moving average seems to be acting as resistance here. As long as we keep trending below that, that's a positive for stocks. Legendary investor uh, Stan Druckenmiller has said that his biggest play over the next couple of years is going to be short the dollar. Short the dollar is good for precious metals. It's good for commodities. Um, it's good for stocks overall. Dollar down generally means market higher. So we'll see where that goes. We don't make long-term predictions, but when a guy that's a legend like him talks, you're best to take that note down and file it away in the back of your mind. So there's UUP. What did that do for gold and gold stocks? Well, they let's go to the 5-minute chart here. They started with the gap down, with the dollar gapping up. That made sense, but they got stronger. Quick washout, uh, looking like this. They shook out below this 184-ish area today on gold and got back above it. Let's go to the daily chart. You can see low here 183.22, 183.38. So a shakeout versus recent lows, but not the lows of last week, but right at the um, flat 21-day moving average now and coming into oversold. This was the weakest on the day, though. Gold really didn't cooperate, but gold stocks did. They clearly undercut their most recent lows. Let's go to the 5-minute. Well, sorry, let's go to the 15-minute on this. And you can see the lows of the last 4 days undercut at the open and immediately reclaimed and then treaded higher, reclaiming the 21-day moving average right into the declining 8. A move back above yesterday's high in the 8 EMA. We would probably take a position in this. You can also see the hookup on the stochastic from oversold. Silver, up barely today, but undercut reclaimed the 21-day EMA, which it's been trending above for weeks. What's next? Bonds, BND, broad bond index down for the second day. So it's looking, this gap was filled now. This gap up from Tuesday was filled. Let's go to TLT long term. That gap filled also. Basically, we're trading in a range. If you look, just you don't even need a 60-minute chart here. We're in a range on TLT. We're on a range in BND. That means we're in a range in yields. Here's the 10-year, just going sideways in this range. It's been a sell the top of the range, buy the bottom of the range, with a couple of shakeouts thrown in for good measure. TYX, the 30-year, also range bound. And finally, Bitcoin. Was looking like a failed breakout. Then it gapped up yesterday, closed at the low, up 6.6% today. This is, again, didn't really see any explanation for this waterfall into the close yesterday. And we're having a severe thunderstorm here. I better wrap this up quickly. Still below the failed island top here from that gap up. So let's get to the tail of the tape and let's get through this quickly before I lose power and have to pause. And so improvement on the stochastics, VIX down big time, back to 17. Failure on the break below the 21. Some economic data. Q1 GDP was weak. PCE inflation data hot. There's more inflation data before the open tomorrow. Jobless claims dropped. The odds spiked up 15 percentage points of the 25 basis point hike. Expectations go from negative to positive with today's action. 11 out of 11 sectors up. The weakest were energy and healthcare. Uh, Semiconductors looked like they may have put in a bottom with a positive reversal on the SOX near this 400 level after being extremely oversold and hooking up on the stochastic. That's good for NVIDIA, which has been the standout. And again, that's their AI chips are head and shoulders above everything else. On the downside, gold, uh, OIH, oil services, and bond prices. What do we do today? Got rid of that QID with the gap up, bought SSO, retaking our entry into the S&P 500 long with us being back above the 21. We added to Meta, which we bought first after hours yesterday, and we bought Microsoft on its day two strength. That gets our beta back in line with the S&P 500 at 1.0. Bottom line, Meta sparks a big tech rally. Large cap indexes reclaim 21-day exponential moving average. Let's look at a few stocks quickly. ON had a big shakeout today. As Crocs had a big gap down, and that trickled over to the shoe sector, but this was the baby getting thrown out with the bathwater. Down very ugly at one point, but bounced right where it needed to at the 21-day moving average, reclaimed the 8 by the end of the day. Let's look at Crocs very quickly. It's footwear. It was a recent leader, not anymore after the 16% down day on 600% volume. Strike that away. Mobileye, also a recent leader. There was a lot of talk this week about a lockup, but their earnings overshadowed that. Yeah, it closed at the top of the range, was down 25% at one point, still down 16% on the day. So broke down out of that base that it was forming. Let's see. Let's look at Microsoft, which we added to on the day two higher high after its earnings gap. A lot of strength today there. Meta, the big gap up and tight range. Let's look at the rest of the NASDAQ 100 Big Seven. Here's Amazon with its gap up. It's up 8.6% right now, right below 120. A lot of resistance from this 120 area from September and October of last year, but cementing the move above the 200-day moving average and this 114 level from its last earnings report. It beat sales by $3 billion and beat earnings near the high end of earnings estimates also. Apple, round out the big seven. Apple, beautiful day. Earnings next week. We'll see where that goes, showing relative strength over the last 2 weeks. NVIDIA, which we continue to own, undercut, reclaimed the 21 and closed up by 1% today. Holding very strong relative to every other semiconductor that's out there. And we'll show Netflix for good measure as it gapped down on earnings, but that gap down has put in the bottom at this point. This needs to get back above its 21E to start helping anything though. And I believe that that is going to wrap things up. Let's check and see if there's anything else that we want to look at very quickly. Oh, Tesla was the seventh. Tesla and Google we have to show. So Tesla up 4% today, trying to put in a bottom after its earnings gap down. And Google, which didn't have a good first day after its earnings report, had a great follow-up today, up 3.7%, coming up near the top of its range and bouncing off this 21-day moving average. That's going to wrap it. As always, love to hear from you. Don at revereasset.com. The phone is 855 Real Wealth. That's 855-732-5932. Reminder, we do what we do to avoid this negative sequence of returns situation. With bear markets, they all occur under the 200-day moving average. As long as we're above the 200-day moving average, the market is not going to fall apart. The Titan 25 that we will continue to track in videos supports that. And remember, it's not how much you make in the markets, it's how much of that you can keep. And with that, I'll wrap up Thursday, April 27th. This is Don Vandenbord with Revere Asset, telling it like it is. Thanks for listening and have a great day.